gold is having one of its strongest moments in modern history. In 2025, global gold demand reached a record 5,000 tons, the highest level ever recorded. The total value of that demand is roughly $555 billion. What is driving it? Uncertainty, geopolitical tensions, persistent inflation risks, volatile financial markets. In periods like this, investors move toward assets perceived as stable, and gold remains the classic safe haven asset. Experts agree the rally is being driven by both investor demand and central bank purchases. Investment demand was the main driver behind last year's surge. It surpassed 2,000 tons, a landmark level. Exchange-traded funds added 801 tons over the year. Private investment bought 1,370 tons in bars and coins, worth about $154 billion. China and India accounted for more than half of that retail demand. Central banks have now been net buyers of gold for 15 consecutive years. Over the past 3 years, they purchased more than 1,000 tons annually. In 2025, buying remained elevated. Net central bank demand reached 230 tons for the fourth quarter alone, up 6% from the previous quarter. That brought total official sector purchases for the year to 863 tons. While below the 1,000-ton level seen in the preceding 3 years, it still reflects durable demand, even as prices hit record highs. According to the World Gold Council, central banks now hold roughly 1/5 of all the gold ever mined. The National Bank of Poland was the largest buyer in 2025, adding 102 tons. Kazakhstan was also active. The National Bank of Kazakhstan increased its gold holdings by 57 tons over the year, including 17 tons in the fourth quarter of 2025. That marks the highest annual accumulation on record, going back to 1993. Under Kazakhstan's priority purchase system, the central bank has the right to buy domestically refined gold. In 2025, the industry ministry permitted purchases of up to 67 tons. The National Bank says the volume of purchases this year will depend on global price conditions and domestic production levels. It is not committed to a fixed amount in advance. That flexibility matters. Kazakhstan mirrors gold purchases with foreign currency sales to prevent excessive growth in the money liquidity. In practical terms, it swaps dollars for gold, helping manage inflation risks while strengthening reserves. Gold has become a central pillar of Kazakhstan's reserve strategy. In early 2025, amid heightened global uncertainty, the National Bank suspended gold sales on external markets, a shift from early years when it periodically sold gold to improve liquidity and diversify reserves. That move aligns with a broader global trend. Central banks are holding gold, not reducing exposure. Experts say that geopolitics is likely to remain one of the biggest forces shaping the gold market in 2026. Rising global tensions are expected to keep demand strong, particularly from central banks and investors. Gold-backed exchange-traded funds are likely to see continued inflows, while purchases of physical gold, bars and coins should also remain robust. Several broad economic factors are also expected to support gold prices. These include uncertainty in global bond markets, possible interest rate cuts by major central banks, and continued pressure on the US dollar. Central banks, which have been major buyers in recent years, are expected to maintain strong demand, with purchases likely to remain close to the high levels recorded in 2025. Overall, the biggest story comes back to geopolitics. In an increasingly polarized world, political tensions are pushing investors to seek safer assets. That environment is raising risk premiums across global markets and reinforcing gold's role as a reliable hedge, particularly compared with traditional fixed-income assets. If those trends persist, gold's appeal as an all-weather investment could continue well beyond 2026. Gold's rally signals something broader about the global financial system. When investment demand reaches record levels and central banks continue accumulating reserves, it suggests a recalibration at risks, not panic. By purchasing domestically refined gold while offsetting liquidity through foreign currency sales, the National Bank of Kazakhstan is strengthening reserves without destabilizing monetary conditions. In periods of uncertainty, that balance isn't discretionary, it's strategic. If you enjoyed this episode, don't forget to like, share and subscribe for more stories from the Astana Times. Until next time!